Vaibhav. In today's session of Visual JForex, we will get familiar with the linear regression slope. This is an indicator based on the linear regression calculation, and this is a kind of a oscillator which we use to determine the trend of the underlying instrument and also the strength of the trend. We basically try to measure the change in the linear regression. So we plot the linear regression, we take out the slope of the n period, and then using that linear regression slope, we see what is the rate of change of linear regression in terms of the price. We normalize the price. So this is the indicator, linear regression slope. Here we don't really have the description, so we will basically move on to the board, the Visual JForex platform developed by the Dukascopy Bank SA. Here we will add this indicator, and I will try to get you familiarized with its parameters. The parameters are divided in two parts, the input values and the output values. Any of these start points can be used. If you want to use trade event, it can be used. So here we have the short description, the mathematical calculation, and how we arrive at this linear regression value. For us, the job will be done by the automated setup, so we don't really need to worry about doing the calculation day in day out ourselves. For us, the automated system is good enough. All we have to do is see and customize these input parameters. So to get to the optimum values, we have to do some experimentation. We have to observe the chart, and we have to determine what is the best combination for us to trade with. So let us add the same indicator, linear regression slope, on the chart so that you can have a better understanding. This is for 50. I had edited it, but let me restore it to the default value, which is usually 14. So here we have this linear regression slope plotted on the Euro USD's hourly chart, and as I tried to explain to you, the slope, this value which is oscillating between the negative and the positive territory. Sometimes it is above, sometimes it is below the zero, depending on the momentum of the underlying instrument. So basically it tries to measure the change of linear regression slope. So we suppose if we are looking at the value for 14 time periods, that means the linear regression value for last 14 time period was calculated on these 14 candlesticks of Euro USD, and then individually the linear regression slope, that is the slope of the linear regression values, was taken into consideration, and it was normalized by multiplying it with 100 and then dividing that product by the price. So we got it normalized for the price action, and it is a fairly useful indicator. So basically the underlying idea is that whenever the linear regression slope is on the rise and it is above zero, that means the momentum is strong and the underlying instrument is in a bullish phase and it is continuing to rise. And then whenever there is a trend change and the linear regression slopes dives below zero and the value keeps falling, it means that the price action has changed the direction from bullish to bearish. So now the trajectory is rather bearish, and it will be better for us to keep looking for short selling opportunities. As you can see here, we had this linear regression slope value above zero, but somewhere here it started to decline, and then this fall accelerated, bringing down the linear regression slope value below zero. Now we have this reading of minus 0.00015. That indicates the strength of the bearish momentum here, and we can use this indicator to build an profitable algorithmic trading setup, and that will be helpful for us to cut down on the tedious process of sitting in front of the screen and keeping a continuous watch. Rather than that, we can build this objective, disciplined, psychologically stable tool, the automated setup, and then delegate our job to it. So here for today's session, we will keep the default instrument at Euro USD. The time period can be anything. For today's session, let us go with a time frame which is a bit higher. We have never really considered daily time frame, but of course you can always make an algorithm based on daily time frame as well. So let us change it to daily. Now we have this daily time frame. Let us see how the linear regression slope is behaving. So after showing robust rise over the last 2 to 3 months, we saw that after this consolidation began somewhere in the first week of this month, the linear regression slope is showing a decline, but still it is in the territory, positive territory only. That kind of indicates that the bearish momentum is not strong, but the upward movement is almost vanished. That means that the bullish momentum is also not strong, so it's kind of indicative of the sideways momentum here. Somewhere here also similar kind of situation was prevailing, and here it had actually entered into a negative zone as well, and then after a couple of days of consolidation it bounced back in the positive territory, and then it this price action again took an upward turn and has brought us pretty close to this 1.2 level. We have not really touched the 1.2 level. We were pretty close to it, but now again the correction is setting in. So this way we can use this indicator, this tool, the linear regression slope, to see what is the underlying momentum, what is the strength, and what is the uh, direction of this trend. So with that, with the help of this indicator, we can plot the course of action for our algorithmic setup. So as I said, the value generally speaking, of course not always, and in the trading there is nothing called 100% surety, so there is no certainty. So we look at this from the point of view of probability, and the probability is a lot higher if we go for bullish trades when the linear regression slope are values are rising and above zero. So that's the case here, and then the values are in negative and are falling, then that means that we should be adopting a bearish stance. So that's how it is. So to do this, to design our algorithm while incorporating all these understanding, we have to customize these input parameters. The shift can be anything from 0 to the 14 here, as we are taking into account the time period of 14. So I think we can go back in time till 14, that is the last candle of the current calculation for the linear regression slope. Then the time period, as I explained to you, time period doesn't necessarily have to be fixed at the default. We can always change it. This is the default setup. We can change it to say 50, and you will have wholly different kind of linear regression slope. So as you can see here, we had the value in negative territory, and then somewhere in the last week of May, we had this linear regression slope value picking up and crossing above zero, and from there onwards it has stayed that course. And again, even now, though it has entered into a correction phase, we are not really seeing change in the linear regression slope below zero. So that indicates that on the longer time frame you have this oscillator still pointing to the continuation of the bullish trajectory. So that means at least for next couple of weeks we will see, if not the bullish trend, then most likely the consolidation phase, but bearish stance is likely far away even from the current levels. So that's how it is. And then coming to the output value, we get this output value which can be used to compare. We can compare the current value to say the value with a look back period which is different, say 10 days back. If we use the look back period of 10 in a different indicator block with the same parameter, just that the ship value will be different, then we can compare these output values to these two output values, and we will be able to determine if the linear regression slope is rising or falling, whether the prices are below zero or above zero, and so on. We can even use different time period slopes to do the analysis, like if the lower time frame linear regression slope is higher, or we can even take a crossover kind of approach for the linear regression slope. So many ways are there in which you can try to design this setup and see what works best for you. Coming to the settings, we have to define on which side the calculation to be done. Offer side can be ask or the bid, and depending on the need of the hour, you can decide this. And then applied price, let me show you the changes which happen in the output value depending on which applied price we use. So basically, let's edit this. I will keep this here. Please pay close attention to the output value for linear regression slope, and here depending on what kind of, there is a slight change since we are plotting this linear regression slope on longer time frame. The change is not that visible, but I think let me change this to lower time frame. Okay, and now again we edit this. And it will be more prominent. Close price, we are seeing that linear regression slope has changed to some extent. If we use the higher price, it has again changed. If you use the low price, it has again changed. So depending on which type of value you are using to calculate this linear regression slope, we will have the different output values. And as I would like to remind, whenever you are doing the comparison, always make sure that you are using the same closing price or same input price for these parameters, even if they are being taken into account or being different look back periods. Still, the applied price should be the same if you want to have a good idea of what is happening in this indicator. So that's it from my side for today's session. I hope you have been able to understand the use of this linear regression slope. If you have any query or any idea to share, you can of course always write it in the comment section, and I would be more than happy to take the discussion forward. Today is the Friday, TGIF. Have fun, and we will be back on Monday. See you then. Goodbye.